Iran has sharply escalated the economic stakes of this entire conflict. The country's parliament speaker has warned that any attack on Iran's power infrastructure will trigger immediate retaliation on energy and oil assets across the region. The threat now extends beyond physical targets to financial ones, including buyers of the U.S. government debt. While the United States is relatively insulated in terms of direct oil imports, remember its key allies are not. Europe and Asia remain heavily dependent on imported energy and food. The bigger vulnerability lies in global capital flows. The American economy, remember, depends on consistent foreign investment, particularly through purchases of U.S. treasuries. Japan, China, the United Kingdom, and European financial hubs together hold trillions of dollars in U.S. debt. These regions also account for a large share of foreign investment in U.S. equity markets. In a high energy price environment, these economies face rising import bills and inflationary stress. And to manage domestic pressures, they may be forced to either print currency or liquidate foreign assets. Selling U.S. treasuries or equities would push American borrowing costs higher and tighten global financial conditions. And that, in turn, risks destabilizing equity markets and increasing fiscal pressure in the United States. Australia, in particular, faces the most severe shock owing to its dependence on Asian imports. The country has already announced the highest fuel price hikes among developed economies. Now, this crisis also touches the foundations of the global monetary system. For decades, the dominance of the US dollar has been reinforced by the petrodollar system, where global oil trade is priced and settled in dollars. But that system is facing gradual challenges now. China is actively pushing the use of the Chinese yuan in energy trade. Iran already operates outside the dollar system due to the sanctions imposed on it. It has been a strong advocate of non-dollar trade mechanisms. A prolonged disruption in oil flows could accelerate this shift toward alternative settlement systems, even if gradually.